All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. And guys, Bitcoin has continued to dump over the weekend, making new weekend lows, coming down to actually a really important support level, an internal support level, where I do expect some sort of range or some sort of bounce to occur. But I do think new lows are coming. Let me just get straight to the point. I think new lows are coming. Now, I made a short 10, 11-minute video update yesterday letting you guys know the overall premise of what I've been thinking and how really it is playing out absolutely perfectly on the charts. This has been my main scenario on the charts for months and months now. It is playing out exactly like we expected to see. And I was warning you guys for these past months that, especially in this range here, that this was a corrective range before seeing the last leg of a larger impulse to the downside, which is still in progress. So let me go ahead and zoom out onto the, let me go onto the Binance chart. I'm going to zoom out onto the 2-day chart. And I really just want to discuss with you guys this. If you guys watched yesterday's video, it's going to be a little bit of a review. But, and actually, let's just go to the weekly chart real quick here. So on the weekly time frame, we've been in a pretty strong bull market for, almost 3 years now, two and a half, 3 years or so. And at the beginning of 2025, we saw our first big break in market structure by breaking down below these range lows down here, which in my opinion, using Elliott waves told me that this impulse to the upside, this 5-wave impulse to the upside could be completed. And now we're looking for, after any impulse completes, we're looking for a corrective move. And that corrective move, if we take a trend-based Fibonacci time to go from the bottom of the impulse to the highs of the impulse, you can see that the minimum time for a corrective move is the 0.382. But generally, your corrective move will last half as long, or, with Bitcoin, that golden pocket area, that 618 Fibonacci time area is a really good time as well for that to last. That would be towards the end of May. And the 0.5 time would be towards the end of February, the last week of February. But what we've been expecting here is a corrective move. Now, you're going to say, wait a second, Divine Hood, we made new all-time highs. How could that be a corrective move? Well, there is such a thing as a flat correction. After any impulse finishes in a very bullish market, or in just, if in a nice trend, you can get what's called a flat correction. So you see your first leg down, you come up in a flat correction to take out the highs of that A wave to the downside, or X wave, or a W, and then you drop back down again and generally take out the lows. If it's a flat, if you take out the highs of the A wave after seeing that rise to make new highs, you will drop down to take out the lows. That is the most common flat correction, an expanded flat correction, or just a flat correction, not a running flat correction. A running flat is where you do not come take out the lows. So on my chart for months now, for months, I've had this same exact ABC on the chart. Let me go ahead and turn off some of these smaller ones here real quick. And if you go back and watch some of my previous live streams, if you go back and watch the video I did with Jason Casper, that collab video, I was talking about how this C wave to the downside from the all-time high is most likely to be an impulsive structure to the downside, which the target, the minimum target is to take out those A wave lows, which is the $74,500 lows. And we are well on our way to doing that. Real quick, I'm sorry, guys. I forgot to welcome you all in. Welcome in, everybody. Time Attack, thank you so much for being here. Thank you for modding. Yeah, Coons gave me a shout out this morning. Really appreciate him. He's awesome. I learned a lot of my Elliott wave analysis from him. Glasshopper77, welcome in. Yeah, I wanted to come in, guys, because it's a really important time in the market right now. And I know there's probably a lot of confusion on what's happening with Bitcoin, and is the dump over? Are we about to rally, see significant rallies? And I just wanted to come in here and keep my community really updated, because this next couple of lows that we make could be really nice swing lows where we could have a $20,000 move to the upside or more. So I really want to get you guys prepared for these bigger swing moves that could be happening. This is where we make our true money in the market. 1 or 2 moves a year where there are these big swing positions where we can really make good money. And about a month ago, we had a really nice swing short from $98,000, 97.2 personally for me, where we get the big moves, and that's where you can make a lot of your money. Also on Solana, we shorted $147 on Solana, expecting that dump from $147. We've dumped all the way down to $101. So, yeah, I just want to come in here. Jaffiel, welcome in, man. It's a pleasure to see you in here as well. Thank you guys all for being here. Drumhop TV, welcome in. Just started your new job. Well, I hope it's going well for you, man. And God bless you. I wish you the best in your new job. And I also wish you the best in trading and your futures with that as well. Little Rich, welcome in, man. Quiles, also, thank you. Welcome in. Yo to you. Jojo, greetings from Scotland. Well, greetings back to you, my friend. Thank you for being here. Let's see. Yes, please, guys, smash the like button. If you do get any sort of insight into the market from this live stream, please smash the like button for me. Please share the video with anyone you think might find it interesting. And we're going to discuss more of the macro TA today. I want to go over total market cap. I do want to go over some of the altcoins today. We do have some nice stuff on the chart, some nice setups coming. Overcome 70, welcome in. Nicole, TRX, we can look at some of the altcoins in just a bit. SpinB, it's good to see you in here. It's been a while, man. Welcome in. Trade Time, welcome in as well. Not really late. It's really not a scheduled stream, but thank you for being here. Darksby 19, hello back to you because I am a crypto people. Normal Swede, what's up, man? Good to see you in here. Much love to you as well. ZMX, thank you so much for being here. Thank you for modding. Should I close my long from 74,850? Now, Normal Swede, that's a pretty dang good entry. I personally would not close that. I will tell you why in just a second, because I am expecting a little bit of a range or a move to the upside. We'll talk about that in just a second here. So welcome in, everybody. If I didn't get to you, welcome in. I'm just going to get right into this here because we have a lot to cover. So now we're looking for the flat correction, right, on Bitcoin. Let me go back to the Binance chart. We're looking for that flat correction in the B wave to come make new highs. And if it is going to be a flat, first of all, you want to see your first push down as impulsive structure to the downside. Now, this structure here is best counted as an impulse. This move down from 109K all the way to 74K is best counted as an impulse. This B wave structure to the upside is best counted as a complex corrective move. It is very hard to see impulsive structure in the macro move to the upside. Also, we ended that macro move to the upside at your Fibonacci retracement between the 1.236 and the 1.382. So right there, right where we were supposed to end. If it was going to be a flat correction, you want to end between the 1.236 and the 1.382. And let me just go ahead and hide this real quick. You can see we ended it perfectly at our pitchfork midline of a very, very highly respected pitchfork that has given us major swing levels throughout the entire bull market. Now, after we rejected from the all-time high, this C wave down was going to be the most important thing to study. If this was going to be start down with an impulse, then that would tell us, you know what, guys, this is more likely to be an A, B, C, where our C waves are likely more probable than not to come take out our 74K lows. So now we're concentrating on this leg down, this C wave in the bigger weekly corrective move. And if we zoom in onto the daily chart, coming into this daily chart here, you can see that especially on October 10th, we got that first volatile push to the downside with a massive increase in volume. And I've shown you guys this, but that was really the start of our impulse to the downside, a very aggressive move down, high volume, expanded volume. And that was our first wave ended there. And most of the exchanges did drop to about 102, 103K, making new lows, taking out your range lows. Then we saw that corrective move, this three-wave corrective move where we did come out and barely SFP the range highs in a sort of flat correction before seeing that big aggressive dump down to 107K, to 80.5K. And that was a third wave move to the downside. Very, very awesome increased volume there. No mistakes about this. This was really impulsive structure to the downside. So for the past 2.5, 3 months, we've been looking at this corrective range in here. And if you guys have been on my channel for any amount of time in the last 2 months, I have been consistent on, guys, this is more likely to be a corrective move before dumping in a fifth wave to make new lows, to at least take out your 80.5K lows, but most likely to come down and take out your 74K lows. I've been consistent on that for the last 2 months. Even when a lot of people were FOMOing in above $96,000, $97,000, I was saying, be careful. We have daily bearish divergences on the chart. We're coming up to the most macro resistance on the chart, being that point of control of our macro range in confluence with the anchored VWAP from the all-time high. And this, if we're going to dump and start a fifth wave to the downside, this is the area to do it. And I base that off of a couple things. So we've been talking about that macro range, this range here, all of 2025. When we came down on the 80K lows, held the value area low, broke some local market structure bullishly, back tested the value area low, made new highs, rejected from our Fibonacci channel, which told me, yeah, this is most likely to be corrective here because we did reject from the Fibonacci channel, but were we going to see a longer drawn out complex corrective move in here? And because we held the value area low of our macro range on multiple back tests, we were expecting a move up to the POC of the range, which also happened to be where your anchored VWAP from the all-time high is. And if the bearish impulse is going to continue, you generally want to reject from that anchored VWAP. So as we were coming up here with daily bear divs on the chart, it was really a prime setup to look for a possible short to break your 74K lows. And we are in process of that. So you can see this dump to the downside. And if we zoom in on this dump to the downside, let me just go on to the 8-hour time frame. It is very clear that rejecting from 98K, now we're in our fifth wave of the larger impulse down, right? From the all-time highs. We have our wave 1, wave 2, wave 3, wave 4, and then now we're in our fifth wave to the downside. So we can say, okay, what are our targets for the fifth wave to the downside? That's what's really important here. What we can do is we can pull our Fibonacci retracement from the 80.5K lows to the 98K highs, the corrective range highs of this wave 4 corrective range. You want to put on your fifth wave targets, which are between the 1.236 and the 1.618 Fibonacci extinction. Now, the 1.618 Fibonacci extinction does tend to get hit more often. Well, obviously, you have to hit the 1.236 to get to the 1.618, but a lot of times that fifth wave will stop around the 1.618 Fibonacci extinction. And you can see right now what is happening over the weekend. We dumped to the 1.236. We're overall holding on the higher time frames. We're holding the 1.236 as support. Let's go to the daily time frame. You can see it was just a little bit of a wick past, a couple days of wickage past it, but the 1.236 is overall holding, but we did stop exactly at our 1.618 Fibonacci extinction of the smaller wave. So for the major targets of this dump to the downside, 70K, guys, 70K I've been talking about relentlessly on this channel as the most macro support in the entire bull market, where if we get down there, I will be looking for guaranteed swing longs. Of course, with confirmation, I'll be waiting for the lower time frames to confirm it. But this 70K to like 68K area could be the major zone of support. Now, within this fifth wave to the downside, 1, 2, 3, 4, 5. So we are not done with it, right? If this was our, first off, this 1, 2, 3, 4, we're in the bigger fifth wave. Okay. Within the bigger fifth wave, you need to see a 5-wave impulse within itself. So that is what we're concentrating on. This leg down from 98K to wherever the low is going to be is the impulse we're looking at. Now, the rejection from 98K was important because we needed it to start with a 5-wave move to the downside within your wave 1. And we had determined last week, a couple weeks ago, that we did have that. A 1, 2, a 3, a little 4, and then a 5, ending at 87.5K. That was the end of our first wave. When we hit that 87.5K point of control, it was the point of control of our 2.5 month long range. If we just look at this range, it was our point of control of that range. We did see the bounce from that, ending the impulse. And then we got that complex WXY flat correction. And if you go back and watch my videos, I was talking about how this was likely, where we could even see a running flat where we do not take out the highs here and we start to dump. And we did. So it looks like our wave 1 was put in correctly, an impulse to the downside, 5-wave impulse. We did see that WXY correction in a wave 2. And then from that rejection, we've been in this wave 3 to the downside. So where is your most common target to end a wave 3 impulse to the downside? Well, it happens to be your 1.618 Fibonacci extinction. So if we look at pulling a trend-based Fibonacci extinction from the highs of wave 1 to the lows of wave 1 to the highs of wave 2. Now, remember, this was a running flat, so this is the start of the correction. You're not pulling it to this high. You're pulling it to the end of the corrective move. The 1.618 Fibonacci extinction comes in at $74,885. That is a very, very clear spot. And Normal Swede, you pretty much caught the exact bottom of what could be now a wave 4 bounce to the upside. We might see a wave 4 bounce to the upside before making another 5th wave down, overall ending the larger 5th wave. Now, even within this, though, there is some concern here, guys, within this 3rd wave. So we did hit our common target of the 1.618 Fibonacci extinction. But if we zoom in even further here, let's zoom in onto the 2-hour chart, and let's look at this 3rd wave down. So now we're analyzing from $90,500 to our current lows. It does look like we still might not be done here. And with the 3rd wave, because we have our big push down in a wave 1, we got our corrective retrace up to backtest some key resistance. What was support flipped into resistance. You could say, hey, is this your wave 3? This your wave 4? This your wave 5? Is the 5th wave, is the 3rd wave done? Is it the 5 legs we need within the 3rd leg? And now we're going to see a bigger move before dropping. It could be, but this last push down here, if we zoom in onto the 30-minute chart, this last push here does look a little bit corrective. It's very hard to count impulsive structure in here. I mean, you could count some sort of ending diagonal in here, something like that. So yes, the 3rd wave could be in. The 3rd wave could be in, and we might be able to see a 4th wave retracement. But it might not be. We still might be within the 3rd wave developing a 4 and then seeing that dump to take out your 74K lows to end the overall 3rd wave before seeing a bigger week-long retracement in a wave 4 before seeing another 5 to the downside. So I know this gets a little bit confusing here, but the 3rd wave, what you guys need to understand is we are not 100% certain as far as probabilities go that this push down in a wave 3 is done with. We have hit and are bouncing from the corrective target. And as far as the waves go, 1, 2, 3, 4, 5, yes, it does look like it could be done. The 5-wave impulse could be done. But this last little bit here is what's a little bit concerning for me that says, okay, wait, this might be a 1, 2, 3. We're kind of getting a flat here and a 4, and then we're going to come down for a 5, ending the 3rd wave there. And then you would expect to see a bigger wave 4 before then seeing another 5-wave impulse for a wave 5. I do not know which one it's going to be. And I have been watching today. I let you guys know in the Telegram today, watch out for the flat. If we come up to these range highs here, start to SFP these internal range highs and start to dump, we could see that one more low come in. And in that case, Normal Swede, you might get stopped out on your trade, but you could look to re-enter upon reclaiming these lows. But whether the 3rd wave is in or not, we are expecting a retrace soon in a wave 4. Now, your wave 4 retrace is generally as long or longer than your wave 2 retrace. So if we measure the wave 2 retrace, it took about 7 days, about a week, right? From the 87.5K lows to the 90.5K highs here. It took about a week. So we're expecting our wave 4 retrace to take about a week or even 2 to 3 weeks, because your wave 4 can be 4 times as long as your wave 2. And a good example of that is actually if we zoom out onto the 2-day time frame and we look at the dump from the all-time high, right? I've shown you guys, it's actually, we'll just go to the 1-day time frame. And let me go to the Binance chart because we have this here. If we look at our move, our corrective move, and our larger impulse to the downside, so going from the October 10th lows up to your highs took 17 days. That was your wave 2 flat correction here. We're literally just seeing a fractal of what happened there happening on a smaller time frame. So if we look at this sort of fractal in here and we shrink this down quite a bit here, it is almost the same sort of flat correction that happened between 87.5 and 90.4K. Same sort of kind of flat correction, and now we're seeing that big wave 3 down. So what we could be looking at now, this was 17 days long. A good example of how your wave 4 can last longer is our wave 4 range lasted 54 days. So almost 3 times as long. Now, if we zoom back in and concentrate on this price action here, zooming back into the hourly chart, we are seeing that your wave 2 retrace took 7 days. So we could expect, if the wave 3 is into the downside, we could expect a move that lasts a week to 3 weeks before ultimately dumping down and potentially coming to that macro 70K support level, which is where I'll be looking for absolutely gorgeous swing longs. I will say here, while we're on the Binance chart, look at where we hit, guys. So let me get rid of this ABC Elliott wave count. We did front run the lows at $74,500, and that's another reason why the wave 3 might not be in if we're looking at this as a wave 1, wave 2, wave 3, before seeing a wave 4 and then a wave 5. We hit the pitchfork support, the bottom of the pitchfork band, absolutely perfect. Now, remember on Friday's live stream, we were pumping right here, and people were getting super, super excited in the live stream. No joke, this was live during our live stream on Friday. We were coming up right up to this resistance, and I said, guys, actually be careful because we could dump from here. We are back testing the top of the band, and oftentimes you will form ranges within these bands. And we did reject from that area. While everyone was getting super bullish on Friday because we had 2 hourly candles bouncing from the local golden pocket and having a nice move up, everyone was starting to get overexcited. And I just came in and said, guys, just be careful. If you reject here, guess what? You're going to drop, and you're at least going to take out your local lows, but we could drop a lot farther, and we did. Now, another point that I just made that I've harped on this channel for quite some time is inside these larger pitchfork bands, you do oftentimes form ranges. Well, what are we looking for now for the next week to 3 weeks? We're looking for a range, guys. It's probably not going to come up to the highs of the pitchfork band because that would be where your wave 3 started. Not where it started, but the middle of the wave 3. But we're looking for a retracement in a range that could last a week to 2 weeks or 3 weeks. And these ranges often form within these bands. Let me go ahead and go to the higher time frame. We'll go to the 2-day chart, and we're just going to look at the top of this pitchfork. We front ran, not the top of it, the midline of it. We front ran the touching of the band down at the lows of 2024, but pretty much got down there. And we front ran it again with the 80.5K lows. So now you're going to fall through it, and you're going to fall to the bottom of it, and the bottom will often hold as support. So we are bouncing from the bottom of the pitchfork band pretty nicely. And I do expect that it could give us some sideways choppy price action for a week, 2 weeks, 3 weeks before ultimately breaking down and coming to 70K. That is really what we do want to see. We want to see a chop for a bit, some relief, a lot of people getting excited that, okay, the low is over. We're going to front run the lows, and they're going to start longing once we get up here and then dump. Trap, more of a trap for retail, in other words. So let's go ahead and say that our wave 3 is done with. Okay, let me go back to the Coinbase chart real quick. Let's just say our wave 3 is done with. We hit the 1.618 Fibonacci extinction, and now we're expecting a wave 4 retrace that could last from 1 week to 3 weeks long, or maybe even a month in extreme cases. What are our targets for our wave 4? To look for a short, a possible short from wave 4, to bring it down to new lows, to at least take out your lows. By the way, weekend lows, Sunday lows, weekend lows often get taken out. So if we're looking for that retracement, we take our Fibonacci retracement, we go from the highs of wave 3 down to the lows of wave 3, and we're going to put on our wave 4 targets, which are between the 0.382 Fibonacci and the 0.5 Fibonacci. So you can see here that our targets the $80,600 and about $82,500, both great levels to look for potential short, for potential rejections. Another thing to pay attention to is your prior macro lows, those 80.5K lows. So once you start to break these lows, they will often act as resistance, sort of just a basic support resistance flip, right? Those lows were kind of our support level. That was the big, SFP liquidity support level. We fell through it. So now after bouncing here, if we spend a week to 2 weeks to come up and hit that area, which is right where the 382 Fibonacci is, it is also your prior lows. You could dump back down and finally create that fifth wave to the downside. So the fifth wave to the downside, the macro fifth wave to the downside. Remember, we're looking for those targets as well. And we did hit those. We did hit the 1.382 target being the 76,000. Let me see. Let me grab that again. I forget what that was. So if we go up here, we turn on our wave 5 targets. It's $76,400. So we did hit the $76,400 level. But the 1.618 is far more important to me. And because our 1.618 has such better support down there, I mean, that 1.618 Fibonacci target, I'll go on to a different chart here, and you can see how important that 1.618 Fibonacci extinction is. So not only is it kind of the main target for this fifth wave to end, it is your value area high of your 2024 range. This is where a lot of the institutions were buying up Bitcoin like crazy pre-election and waiting to see the election results. They were buying up towards the lows of the range, and we saw a massive reaccumulation range in this area. So if the big players got in this general area, they are going to defend their positions. If we get down to this area, they will defend. These guys that are putting billions of dollars or hundreds of millions of dollars in, they will defend. So that's why that value area high is very important. If we take our Fibonacci golden pocket, let me just zoom out to the daily here. From the last major weekly lows, being those 49K lows, to our all-time high, and let me make sure that's on there, and we look at our golden pocket, you're going to say, wait a second, Divine Hood, we're hitting the golden pocket right now. Is that why we're bouncing right now? Yes, there is some technical. The non-log golden pocket still does get respected. But remember, this move from 49K to 126K was more than a 100% move to the upside. If you're on the log charts and you have more than a 100% move to the upside, you need to come into your Fibonacci and make sure your settings are clicked to based off log scale. That is going to shift your golden pocket to the proper 61.8% retracement. Now remember, that 61.8% retracement is what's psychologically ingrained into our minds. It's ingrained into nature, that number, that certain percentage. So you want to be using the proper retracement levels based off the logarithmic scale. And where does that come in? $70,000, guys. $70,000. Value area high, logarithmic golden pocket, the ending target, the 1.618 ending target of the fifth wave. I mean, just such key support down here at 70K. And it would satisfy us taking out the A wave lows of our A, B flat, C flat correction. It would validate that. And then that could be where we see a nice move up, at least potentially up to the golden pocket. But it could be now that your larger corrective move is over, and now you're going to continue in the super cycle bull market. So this level here could be a historic long position if it does play out the way that I am somewhat expecting it to play out. Now, there is no guarantees of that. We could continue dumping in a bear market, like really see some, a drop to the mid 50s. We could see it get really bad really fast. So we don't know for sure. And I will be looking for daily bull divs as we're coming down into this support. If we do see some daily bull divs on the chart, that will really tell me, hey guys, we could be setting up very nicely. Now you can see here on NAMI, which is quicker, we already have 3 drives of daily bull dips. Money flow starting to curve to the upside. Market Cipher B is not there yet. And what we would want to see is that range lasts 1 to 3 weeks. see a quick dump to the downside as far as price action goes, giving us those bull divs on the daily. That could also give us another drive of bull div on NAMI. It is looking like it has the potential to set up for some very nice bull divs at 70K. But overall, all of this to say, the impulse is likely on the higher time frame. The weekly impulse to the downside is not done yet. But even our fifth wave to the downside still needs more to go. And it's likely to take out the 74K lows. That is the highest probabilities that we are going to come take out those 74K lows. Now, while we're on this chart, and I want to show you guys this pitchfork, this is another macro pitchfork we've been watching, where for the entire year of 2025, the major pivots of the pitchfork, being the top of the pitchfork and the upper band of the pitchfork, have really held us and showed us every major swing position. At the beginning of 2025, we rejected perfectly from the top of the pitchfork. We retraced for 4 months to the bottom of the upper band of the pitchfork. We bounced perfectly. We came up again and formed that distribution range at the top of the pitchfork. Then we dumped down with our 80K lows to bounce from the bottom of the upper band again, just like we did here. Bounce from the bottom, bounce from the bottom. Well, now we are breaking this to the downside. We're breaking this pitchfork band, which I say oftentimes we create ranges in and around these pitchfork bands. That's what this was for 2.5 months. It's breaking to the downside. And you could see really when we got this big breakdown, finally lost it. If you go on lower time frames, you can see we were trying to back test it and we couldn't get back in. So that's when we saw the big dump. So we are at some pretty key targets here, but I do think that now that we're losing and closing a weekly candle below this pitchfork band, it is likely that we drop to our next macro support level. Another thing that I did tell you guys and warned you about last week, actually 2 weeks ago. When was that? That was last Wednesday, January 26th. January 28th. Remember, this was our total market cap. And for the past 2.5 months, the bottom of the pitchfork was holding. But we started to see weakness in this area here where we fell below and closed that weekly candle below our pitchfork. And I made videos about this on Wednesday, on Thursday, on Friday. We covered it in the live streams, but we were having some trouble getting back inside that pitchfork. You can see, first off, if we zoom out to the weekly time frame, we closed our first weekly candle below the pitchfork 3 weeks ago. And then that was our first major warning sign. Guys, weekly close below what held for 2.5 months. Now, if we zoom in onto the daily chart, on the daily chart, we spent a few tries on the daily time frame. 1 try, 2 try, 3 try, 4 try, and then after a bigger retrace, 5 tries to get back inside of that total market cap. And when we were rejecting from that total market cap on that 3-day push up, remember, this was like the day that Bitcoin made the $86,300 lows, and I took the long on Bitcoin, and the total market cap was here. And we said we have to be very careful how we retrace up here, because if we retrace up and backtest that for a higher time frame backtest and it does reject, I not only expect us to take out these lows, but we could see that major drop come in, because it would be confirming the bearish backtest on a higher time frame. And it's exactly what happened. We rejected here. I actually warned you guys about this. Go watch Wednesday, January 28th video and Thursday's live stream. I warned you guys that this was going to happen. And sure enough, now we're dropping to some major, dropping down to much deeper levels of support. So on the daily time frame, seeing that rejection on the bearish backtest of the pitchfork after closing a weekly candle below it and multiple daily candles below it was a big warning sign for me. And that means that, hey guys, we could drop to our big levels for our wave 5. And very similar to Bitcoin, we're looking at the impulse 1, 2, 3, 4, and we're looking for the 5th wave down. And on the total market cap, you can see your 5th wave targets, the 1.236 Fibonacci to the 1.618. Now, I really like this next box of support coming in here, this 1.618. The daily around 2.39 trillion. We have a weekly at 2.46. We have that 1.618 in there. I mean, it is just really, really nice support coming up below us here, where we could see the total market cap start to bounce in here and really see a significant retracement to the upside. But as far as our total market cap goes, we were warned that we were about to break down. We were warned because for 2.5 months, what was holding as support finally started breaking, finally started showing weakness 2 weeks ago. And that's what gave us our big volatile dump to the downside. Money flow just crossing into the red on the daily time frame. We did have the daily bear divs. The daily bear divs confirmed on NAMI and Market Cipher B. And we took out the liquidity here, which I know that doesn't, on the daily chart, that looks inconsequential. But this level, by the way, guys, I had this level marked out weeks before we came up here and hit this. Weeks before. Guys can go back and watch the videos if you don't believe me. But we can zoom in on the 2-hour chart, and that liquidity was from a very important, that was this very aggressive liquidity trail that was started. And so the thing was, if we start to break up into that liquidity trail, it's likely that you're going to keep impulsing up to stop out all that liquidity at once to come to the top of that liquidity trail. But that's also where we bearishly backtested the pitchfork band after dropping inside the pitchfork band. That was our bearish backtest of the pitchfork band before dumping to the bottom of the pitchfork. So that's why that was an important internal high with liquidity. What happened? We came up, we grabbed the liquidity from that high perfectly. That was the top of our wave 4, and since then we've been dropping to the downside. Another thing that I've been pointing out, especially on Bitcoin, on the weekly time frame, triple drive of weekly bear divs. Guys, this is no joke. If you are a technical trader, you cannot put your head in the sand when it comes to these signals. Major weakness, 2024 all-time high to the beginning of 2025 to our most current all-time highs. Triple drive of weekly bear div, money flow draining out as the range is forming of 2025, specifically as the entire year range of 2025 has been forming. Money flow's been draining out with weekly bear divs and even higher time frame bear divs going back to 2024. You can see on NAMI here, multiple drives of bear div, and we had the money flow bear divs. Money flow bear divs. These are major warning signs that you cannot ignore if you are a technical trader. So because of that, we were expecting a potential correction at least to the bottom of our range of 2025. Also based on confluence with Elliott waves, A, B flat, C flat. Now, if this is a bear market, because once again, on the weekly time frame, we're just crossing into the red, guys. This could get very bloody, but we do have some hope because you can see if we do take out, actually even taking out the 80.5K lows, we are setting up for some potential bull divs on the weekly time frame. We're setting up for some actually very nice bull divs on the weekly time frame. In the next, if we can, bounce within the next month or so, I would say we could have some nice bull divs on the weekly time frame. Now, coming down to our major support of 70K with weekly bull divs would be a really good sign for me to start looking for swing longs. But that's kind of what I wanted to talk to you guys about. Another major warning sign, of course, you guys have heard me harp on over and over and over throughout the past 2 months, was the losing of our Fibonacci channel. You know, this Fibonacci channel guided us through the entire bull market. It was so highly respected throughout the entire bull market. And once we lost it and started backtesting it and rejecting, that was really the signal for me that, guys, we're going to at least come down and take out your 80K lows, but we're probably going to come take these lows out. And I've been consistent on that from 3 months ago or more. Actually, really from much higher, but really strong since we rejected on the bearish backtest of that channel. All right. Let me jump into the chat here. I hope that covers it a little bit for you guys for Bitcoin. So I am expecting new lows, but if the third wave is in of our fifth wave, if this third wave is in, we could see a retrace to about 80.6K or 82.5K over the next week to 3 weeks. So normal Swede, you asked me, should I stay in this long? Well, you pretty much caught the dang exact bottom. So good job there. And yeah, I would hold it. Why not? You're in profit. You know what you could do is if we come up and take out the range highs again, you know, kind of take out these highs again and double top, then maybe take off 25% and move your stop to break even just in case this is going to be a little bit of a flat in here where then you're going to dump down. And if you're looking at a flat, then let's just pull those targets. We'll go here and we'll look between the 1.236 and we're going to put the 1.382 on. Where are we at? Let me just do this. 1.382. Yeah, you're going to be looking for a flat correction between like 8250 and 81,000, let's say. So you could still come up there. You could still do this and then drop, ending the third wave, then seeing a bigger fourth wave retracement that lasts a week to 3 weeks, and then seeing that fifth wave down to 70K. So we'll see. But even guys, as far as trades go, you know, you always, as an Elliott wave trader, you always want to try to catch the third wave. Why do you think, guys, I shorted $97,200? I took profit at the back test of the value area high. I took profit at $87,500. But why do you think that I compounded when we lost $90,500 here? I mean, I compounded that because it was highly likely that the impulse down was going to continue. And the wave 3 is the best leg to catch with as an Elliott wave trader. Now, knowing that the highest probability is to make another low within the fifth wave down, wave 4 shorts are acceptable to look for. But be careful because you've already dumped tens of thousands of dollars, right? So if you're going to look for a wave 4, yes, you can look to short 80.6 all the way up to 82.5K to bring it down to at least take out your lows. Like the second you take out these lows, you TP1, right? Because the wave 5 could be, I don't want to call it a truncated, but it could be just a simple swing failure pattern. You go up. It doesn't have to come down to 70K. Remember, the main target of our bigger ABC correction is to take out your $74,400 lows. And now that we have weakened liquidity resting right below those lows as well, our fifth wave could be that, an SFP. Boom, SFP. We're not going to make it down here, but I still say it's a higher probability that we make it down here, but let's just, you know, we don't know. We don't know how the market's going to react. I am still looking to compound my short between 80.6 and 82.5. I will be looking to compound on those wave 4 retraces. All right. Welcome in, everybody. I hope that helps. Please hit the like button for me. Really quickly, I want to take a second to shout out the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some of the larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you move in the futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. So for instance, if you deposit $100, you can get a 50% deposit bonus. You can get $50 free if you deposit $100, which is the highest I've seen for any exchange that does $100 deposits. And then they have 20% deposit bonuses up to $5,000 and 10% deposit bonuses up to $20,000. So if you're interested, really, really good deal that BYDFI's got going on right now. One of the best in the industry, especially with those referral or extra initial bonuses there, initial deposit bonuses. I've also partnered with BYDFI to create the Telegram community where I posted over the weekend for you guys. I did some emergency posting over the weekend, let you guys know. If you're interested in joining that Telegram, it is free. All you need to do to join is sign up with BYDFI using my affiliate link in the description and deposit $100 into the exchange. That $100 is still your money to trade with. You will get the discounts on the trading fees. You will get the 50% deposit bonus if you do KYC. And that's it. Once you've done that, there's a Telegram link in the description of this video. Click the Telegram link. Once you're in that Telegram verify channel, just type in /verify in your user ID, your BYDFI user ID, which will be right up here. It's probably going to be a string of letters and numbers for you guys, but that'll get you into the Telegram. And once you're in, you're in. Second partner of the channel is NAMI. NAMI is this momentum and money flow indicator down below Market Cipher B. I use it for all my confirmations. So as we're coming down to some key support levels, If we would have SFP'd this last night with bull divs on the chart on the 4-hour time frame, I would have taken the long. I did not take the long, even though that we hit the 1.618. I was looking to come down a little bit lower to take it. So I'm not in a long position right now on Bitcoin. But I was looking to take it based off the bull divs that we were seeing. So NAMI is my confirmation to enter trades once we get to key levels. But we front ran the key level for me, which was the SFP of 74K. NAMI, they have partnered with the channel to give me, let me give you guys 50% off. So if you're interested in purchasing NAMI, use the affiliate link in the description and use the promotion code Divine50 in the discount box, in the promotion code box, and you can get 50% off. Lastly, we have MEXC and Bybit, both great exchanges that I'm partnered with, both offering some discounts on trading fees. Bybit's offering up to $30,000 in futures trading bonuses, and MEXC's offering a 10% initial deposit bonus up to $1,000. Okay, let me jump into the chat here. Welcome in, everybody. I'm going to get a drink of water real quick, and then we'll start reading the chat. Thank you for being here. Okay, ZMX, I also took your trade idea from 74,600 on Bybit. I did close it because of the stability rule of the funded account, but it was a killer trade. Awesome, man. Well, if it's a winner, right? And that's really awesome. Looking for the lowest possible potential buy zone on Jasmine. Okay, well, we'll look at some of these altcoins. Drumhop TV, absolutely, man. Thank you as well. Have you seen my trades in the Telegram? I have, man. And you, Normal Swede, it's looks like you're doing really well, dude. So keep it up. You know, it's awesome that you are starting to get this trading thing down. So buy silver back at $60. Buy silver at $60 back to Bitcoin. Yeah. Silver, guys, I'll cover silver for you as well, because I just was talking with Jason yesterday about this. I was calling for the short from 117 to 120 for a mega short, and we got it. Wow. Okay. A lot of people in here today. Thank you, guys. Please hit the like button if you get anything out of this live stream. Serious Crypto, welcome in, man. 30 to 35 Bitcoin would be Bitcoin bottom. Wow, man. Well, you know what? That is like the absolute bottom. 34K I'm looking at. I hope it doesn't get there. I really hope it doesn't get there. But yeah, long from 77,400 and looking to tap 80K to see price action. Yep. Cool. Scalp longs are acceptable in here, guys. We dumped over the weekend. So we also are going to have a CME gap to fill. So scalp longs are absolutely acceptable. Let's see here. All right. ADA. Yeah, we'll look at some of these altcoins in just a second. I also took, okay, good. Baru, welcome in, man. Good to see you in here. Chez, this is upsetting. Are you saying that Bitcoin dropping like this is upsetting? I would encourage you not to have that mindset, to rather have the mindset that, yes, this is painful short term, but it's a buying opportunity or a long opportunity that is coming that could provide you really good returns. So you got to shift. Now, yes, I understand it could still be upsetting, and you can still have those upset feelings and still trade properly. But you just got to make sure you stay somewhat balanced with it. But I hate knowing the not knowing feels, stupid, I guess, or 0.786 liquidity. Okay. Okay. 62K, 200 weekly moving average body. Yeah, 62K, man. If we break 70K, guys, we could drop to 62K. We could drop to the POC of our 2024 range. We'll just have to see, how it looks. But yeah. For MK Ultra, it's sickening. Not sure. Yeah, I'm not sure, man. 35K bottom in October. 35K bottom in October. Man, that would be a very aggressive drop. But you know what? I wouldn't put it past the crypto market. Honestly, we saw the drop in 2021 that was much worse than we thought. Lost X, welcome in. I see one more low in the third. Yeah, I see one more low in the third wave as well, Lost X. So if we're looking at this third wave, and I kind of went over this a little bit, 1, 2, 3, this could be a flat and a 4 before coming down in a 5 to end that third wave. And then you see that wave 4 retrace and then get the fifth wave in down to 70K. So yes, it might not be done. And that's why normal Swede, if you start to break, if you start to reject from these highs, you might want to think about taking some profit. Now, I'm not a financial advisor. I don't give financial advice, and I'm not telling you what to do. I'm telling you, if I was in that long from $74,600, I think you said, I probably already would have taken some because we came up. Actually, did we actually break those highs, or was that a double top? So no, we haven't quite broke the highs yet. It's more of a double top. But if you come up and you SFP 79,338, let's say, then I would think about potentially taking some profit off the table because you could be in a flat here. Okay. Yeah. Okay. I see. Wave 4 is a flat correction. Yep. Lost X, I agree with you. Wave 4 is a flat correction. We see another small dump. Okay. All right. Thank you so much, man. Yeah. Normal Swede. Awesome, man. I hope you so thankful for you taking your time teaching us like this. Words can't explain how much your videos and being in the Telegram have helped me. Well, Normal Swede, thank you so much for the kind comment, and thank you for your positive attitude and honestly, your willingness to learn. So you got to be proud of yourself as well. And I swear to you guys, if you guys have an attitude like Normal Swede does and doesn't take things personally, no trader actually knows what the price action is going to do. We're using this, we're finding a bias based off technical analysis, right? And even the technical analysis can be 100% right, and you could still get the trade wrong, or based off your psychology and trading, or you can be wrong on the technical analysis and still have a winner and think you're a good trader when maybe you're not. It's really about having no ego when it comes to trading, being willing to learn, being willing to constantly evolve. And once you find a strategy that works, it's about mastering discipline with risk management, with your own emotions. So Normal Swede, I think you're doing really, really well with that. And I really do think that if you keep this up, continue to learn, continue to grind, learn how the way the market moves and learn the way the market makers play with retail, you can be very, very successful in time. Todd, welcome in, man. Good to see you. And Olga, good evening to you. Divine, since both wave 1 down from 126K and wave 3 down from 115K were 3-wave counts, shouldn't wave 5 from 98K also be a 3-wave count? Well, I don't think they're 3-wave counts. So you have to kind of zoom in on those lower time frames to look at that. But they're not really 3-wave counts to the downside. I see what you're saying with all of this. It does get a bit confusing in here because you have a lot of overlap in here. You could say 1-2s, 1-2s, 1-2s. All of this was the end of it. So you say, oh, that's your big 3, but where's your 4s and 5s, right? When you do zoom in, there is a way to count this as impulsive. Another thing you have to look at here is when you're looking at impulsive, if this was a corrective structure down, first of all, you're not going to break the lows. If you're going to break the lows, it's going to be a flat, and then you'd want to come right back up and take out the highs. But you want to look at volume too. Remember, volume and liquidity are the two most important things in the market. So if you're seeing gigantic spikes in volume on dumps to the downside or rising volume as you're dumping, then you're more likely to be in an impulse to the downside rather than a corrective move. We also had to keep in mind that we were at the highs of a distribution range, a tap 1, tap 2, tap 3, bear divs forming throughout this entire range, and bear divs were forming, and your money flow was draining out of the asset as the range was forming, making it more likely to be distribution. And distribution happens at the top, not the bottom. Accumulation's at the bottom. So you would expect to see the same thing in reverse in accumulation. You'd expect to see bull divs, price action getting lower and lower, the bull divs. And I'm talking about on high time frames like the daily. So, we are potentially setting up for something like that where you would see bull divs here, right? And then you want to see money flow starting to come up as that range is forming, which you can see money flow is starting to come up overall as this potential range is forming. Now, what we could expect here after this fifth wave is done, let's just say this fifth wave is going to be done at 70K. You're probably going to bounce up to your golden pocket between 98K and 70K. You're probably going to reject there. You're probably going to come down and bounce from this golden pocket, and that kind of creates that distribution range in here. Or you could even come up and take out the highs. So what we could do is bounce from 70K, come up, take out the highs of 98K, then you drop back down to the golden pocket, and that kind of creates that left shoulder, head, right shoulder, like that inverse head and shoulder. We'll have to see. And of course, on the lower time frames, while we're at 70K, we're probably going to chop around for a couple days at around 70K before we see that push up, maybe even a couple weeks. So we'll have to look at that once it occurs. We just need more data on the charts. We're still in the phase of the drop here. Okay. On one of your charts, you had a object naked weekly POC sitting at 77,320. Yes, I did. Okay, so that was the Coinbase chart. Now, guys, I had that green box of support between 78,370 and 77,320 because we had a naked weekly point of control. So let me turn the weekly level was at 78,370. And we had the naked weekly point of control and a naked daily point of control around 77,300. I think I deleted them because we hit them. Yeah, I deleted them because we hit them. They're not valid anymore. We busted through them. So overall, I guess you're kind of holding at that general area, but you wicked, in my opinion, you wicked way too far past it. From 77 all the way down to 74,000. That's like $3,000 wick past it. So no, I would say that's not a naked weekly point of control anymore. That's why it's off my charts. And actually, even this weekly here, the only reason I was leaving this weekly on because on lower time frames today, it was acting as resistance, kind of. So this weekly, I will now delete as well because that weekly has been hit now, and we're chopping around the weekly. Let me hide this here. All right. Yes. Okay. All right, let's go through some of the altcoins real quick, guys. So really quickly, I want to talk about Ethereum because I've been talking about Ethereum coming down to this level, oh gosh, for quite some time now. And I told you guys this was the spot buy area, right? Now, we could make one more local low. We could come down to about $2,100 or maybe even down to like 1970. But on ADA, and this is very, very important. Well, first of all, it's important to see that your volume is still increasing on this dump, which is scary. You don't want to see that. I will say this not on ADA, on Ethereum. If you see a bigger 3-wave corrective move, your C wave does end on an increase in volume. Generally, that impulse down ends on the spike in volume. So if we're about to end it right now, that would be acceptable to see. ADA is quite a bit different than Bitcoin here. Why do I keep saying ADA? Ethereum is quite a bit different. But Ethereum, you know, we had this pitchfork pulled from the bear market lows of 2022 up to the original cycle highs in December of 2024, down to those $1,400 lows. And we've been looking at this pitchfork that's been highly respected, you know, chopped around in the lower band, came up to the midline, made that 2-3 month long range at the midline, dumped down to hit your anchored VWAP, flipped the upper band to support, and then we worked our way up to the top of the pitchfork. Top of the pitchfork. Now, we didn't. At the first time we tried to hit the top of the pitchfork, we wicked past it a little bit, but we didn't take the all-time high, which was at 48.67. So we make one more new high to actually SFP that all-time high, and this all in here was distribution. We were forming a distribution range. If you remember, on the daily time frame, look at this. Bear divs, bear divs forming, money flow draining out, specifically right here as the range started forming, money flow draining out as the range was forming. Money flow draining out as the range was forming. The bear divs confirmed on the chart at the pitchfork highs. And I was warning you guys that this was more likely to be distribution. So we drop on October 10th to the bottom of the upper band. Then for a few weeks, we held the top of the upper band, saw some wickage past it. But once we lost that upper band, you backtested its support. And that was, or backtested its resistance, excuse me. We shorted this right in here as well. Now, another big thing was, we had our 4-year long range value area high. Now, this is not the 4-year long range. This only goes back to March of 2024. So this range is only about 2 years. But this is very important because look at where we're touching. We're touching the value area low of the range right now. We could come down a little bit further to take the liquidity. at 2113. So just be aware, we could see, if Bitcoin makes another low, we could see another low and actually hit the lower band of the pitchfork at around 2100. But we are at major support, and we did, after losing the upper band here, that was also our rejection from the 4-year long range value area high. So let me go show you that range. If we look at the last 4 years of Bitcoin, the 4-year long range value area high, falling back inside this volume profile was super important because you tried to break out of it. You did. You back tested it along with the pitchfork band. You come up to the top of the pitchfork, and this now we could classify as a distribution range, a failed auction distribution above our 4-year long range value area high. The second you start falling back inside that volume profile and closing weekly candles inside that volume profile, it is bearish. So now what do you look for? You look for a small bounce to backtest. Now, once you reject here, you confirm re-entry back inside the volume profile. Once you confirm re-entry back inside of it, you're expecting pretty much new lows below that local low. We got it. We bounced from the midline of the pitchfork. And for the past 2.5 months, the midline's been holding. Bounce from the midline, bounce from the midline, small bounce from the midline. But once we finally lost it, that's when we fell through. And now, guys, now that the pitchfork midline was holding for 2.5 months and we're losing it, that means you could come down to your next major pitchfork support, which happens to be, right around where we're at now, right around where we're at. It's the SFP of these major lows. It's also your logarithmic golden pocket in this general area, $200-$300 area of support. But this golden pocket is super, super important. So if we pull a golden pocket from the $1,400 lows up to your new all-time highs, and we put that golden pocket on log scale, because that is more than a 100% move. And I showed you guys this on Friday, but if you do it non-log style, if we pull that golden pocket, we put it on non-log golden pocket, that is where we bounced 2.5 months ago, right? Right here. But that is not your proper 61.8% retrace. It's not your proper retrace. Your proper retrace to 61.8%, if you take that same Fibonacci and you shift it to log scale, because it's more than a 100% move up, you can see that that's your target, right? 2250 to 2160, rounding there. But we finally came down and we're bouncing directly from it. You can see on the daily time frame, we wicked down to hit the 0.65 of the golden pocket. The daily candle is closing at or above the 0.618. By the way, I will say this. I had a spot buy at 2162 that did get triggered. So I did buy some spot Ethereum. I also have another spot buy if we take out these lows. I think it's like $30 below those lows. Right? Like 2090, I think it is. Now, what other support do we have there? Because I showed you guys, I think it was on Friday, a weekly level at 2228. You can see that we're pretty much holding that weekly level. We just wicked past it a little bit today. A daily level, right at 21, same level, daily 2228. The daily and the weekly are both right here. I think we had a naked weekly point of control down there. The naked weekly point of control. No, it wasn't a naked weekly. It was a naked daily point of control. Multiple naked daily points of control within this box. That's why this box was such a strong confluence of support. 2250, right on top of the 618, we had a naked daily point of control. And at 2186, right on top of the 618 or 65, we had a naked daily point of control. So we had a lot of confluence in this box to see a major bounce to the upside. I did actually take a long at 2162 as well on Ethereum. Now, could we make another low? Absolutely. We sure could. Ethereum does look a bit different than Bitcoin, and we could be in a 3-wave corrective move. Now, let me turn off all this stuff there. And I'm just going to take that off the chart for now. So, this was very impulsive structure. This was a very big push to the upside. you would have to look at it as, some 1-2s, 1-2s. Maybe your 3 here. It's a bit tough to count this. You would have to count, in order to count this as a multiple 1-2, you'd have to say 1-2, 1-2, 1-2. This is your big 3, and then you start to get your 4-5s in here. Whether you want to look at this, no matter how you look at this push up from 1,400 to new all-time highs, very big impulsive, very big increase in volume on this push up. And if we're looking at this as impulsive structure to the upside, where's your common target to retrace? In a sharp zigzag correction, it's to your golden pocket. And so we're now finally coming down to that golden pocket and even coming just a little bit lower to wick that liquidity, like to start to form a range in here, right? Something like this, where you can see that first low, maybe range for a few days, come down, take the liquidity, actually hit the pitchfork band, the lower band, and then, start to form that kind of mini accumulation range in here before seeing at least a test to maybe test this midline again. If we start to lose 1970, 1975, 1970, 1975, I think it's going to get bearish. I mean, yes, you could bounce from the 786, but I would be very cautious of really continuing down to about $1,600 to the bottom of the pitchfork. And that's where we could get ugly. We do have a nice weekly level down there, right at your POC, right at the bottom of the pitchfork. So that's your next kind of major support level, I would say, is down in here. But this is very strong support here. So I'm looking for it to hold. Now, I have to say, on the daily time frame, so far, money flow is just crossing into the red, and we do not have potential bull divs like we saw on Bitcoin. On NAMI, we do have some slight bull divs here. You can see these bull divs coming in. That down, I would say this is a nice level of support. And this could be an area where we do bounce. It is not guaranteed. And if Bitcoin is going to continue dumping to 70K, then this might, let's hope this holds up a little bit better, but let's hope it holds at least 1970 and we see sort of this inverse head and shoulders pattern kind of start to take place, or accumulation range start to take place. But for me, I think Ethereum's a good project. I plan on holding that spot long term, at least probably until we break the all-time highs. Or if we do come up like now, let's just speculate here, throw in our golden pocket. We'll put it on log scale because that is more than a 30% drop to the downside. If we come up to about $3,700, I probably would be looking to take some profit on the spot buy that I just bought down here, because it is going to be macro resistance. The 4-year long range value area high, your anchored VWAP from the all-time highs. Now, the anchored VWAP probably will be lower by the time we get up there. But it's also your log golden pocket. And you'd be taking out all these internal highs in here, the liquidity from all these internal highs. So that's speculation if we bounce now, if we don't make a new low. Let's go back to the 2-year long range. So I want to go back to that range that was from March of 2024. So just this upper price action that most of the coins have been in. Most of the coins made major highs, altcoins made major highs in March of 2024 and have kind of been grinding sideways ever since. We did pretty much grind sideways with one big deviation down here. That's pretty much a sideways range with one big deviation. And you can see that we're at the value area low of the range. We did see a very nice bounce from the POC of the range. Got that nice move up. And now we're coming down to the value area low. So I would expect at least some sort of, even if it's a lower high before putting in another lower low, I would expect some sort of relief rally within the next couple of weeks here on Ethereum. Okay, I know I'm taking too long on some of these altcoins. Let me see here. We were going to go through TRX and ADA. TRX. You'll have to excuse the chart because I don't keep an object tree for TRX, but it does look like we're coming down to that support level that we looked at last week. the 786 in confluence with a monthly level, in confluence with a naked monthly point of control. We haven't quite hit it yet. And yeah, so this is kind of your support level you want to see. Now be careful because overall this does look like a three-wave corrective move, just like XRP, where your C wave was a blow off top impulse within the C wave. But that means that you could see that drop to take out those lows, just like XRP did. Let me go show you XRP real quick because XRP did something very, very similar, right? So we had that three-wave corrective move with that big blow-off top C wave, and then you did end up coming down to take out those lows. So TRX could be doing something very, very similar there. Three-wave move, we could just be lagging behind. And it could come down to your big macro support, right? Like this is the big, big support right down here. Daily time frame still looks pretty bearish. Money flow leaving aggressively. No bull divs on the chart. I would expect at least some sort of relief bounce from this 786 area. Let me just take off that. So 786 at 28 cents, around 28 cents is a strong support because not only is it a high time frame support level being a monthly, but it's a high time frame volume support level being a naked monthly, and it's a nice Fibonacci retrace, a macro Fibonacci retrace in there. We did finally lose this channel. Let me just hide this for a second. Finally lost the channel. We're coming down to support. Now, if you lose, if this doesn't hold and we just skip, blast right through this, I would even expect to come down to take out the liquidity of these two lows. You might see a small bounce to back test that area before coming down to your macro support down here. But at that level of the macro golden pocket, 26 cents, around 26 to 25.5 cents, that is going to be some very nice support for TRX. It's also going to be the value area lows right there, your weekly levels right there. So 26.5, I would say, to 25.5 cents is what I'd be looking for. Let's zoom in here onto the 2-hour chart. Are we seeing any bull divs? Yeah, so we are starting to see some bull divs as we come down. You can see we actually haven't hit the level yet, but we are starting to form some bull divs. I don't like the way money flow looks on the 2-hour, but you are starting to see some bull divs in here. And I want to look at the 4-hour. Yeah, slight bull divs. You can see actually here to here to here. Those are lower, higher lows. Money flows bottoming out, starting to curve to the upside. NAMI has got the bull divs and even higher time frame bull divs as well. Oops. Higher time frame bull divs as well. So 4-hour, I would at least expect some sort of bounce from this general area. And let's look at the 8-hour because the 8-hour is going to be telling. Man, okay. The way the 8-hour looks, crossing into the red, heavily bleeding in the red, you are getting the green dot, the big green dot, which would give us at least a small move up, right? But I wouldn't expect that this is probably not going to hold overall. With the daily time frame, the way it's looking on Market Cypher B and NAMI, and the 8-hour time frame looking the way it's going to be, but on the intermediate and lower time frames, we do have bull divs. So I would expect those bull divs give us some sort of bounce in here, but we're probably going to end up rolling over and coming down pretty aggressively. So just be aware of that. That's what I would say for TRX. 28 cents, we already talked about that. And then 26.5 cents is your big area. And the liquidity down at 27 cents into your POC. So what you'll probably see on the daily time frame, if we bounce here, lose it, you're probably going to come down, wick this out, but close the daily candle at or above the POC. When I would start even being remotely interested in TRX for me personally would be down at 26 to 25.5 cents, 26.5 to 25.5. All right. ADA. Now, ADA, remember, guys, we've been talking about ADA in the last few streams, and ADA overall looks pretty damn good. It's a higher time frame, right? On the daily time frame, we have our big impulse down. the 1 2 1 2, our big third wave. And then we could count this two ways. So we could say 1 2 1 2. We could say the third wave ends here. We get that 3-wave retrace and a wave 4. We get another 5. We get another 4. And then this could be our last 5 in here. Or you could count this as all of this is the third wave here. This was your first 4. This was your first 5. So we're going to retrace, make a lower high and another 4 before making another low and another 5. Let's throw on this liquidity because I said if, and remember, I actually even said this last week, guys. If that 31.87 doesn't hold us, then we're going to sweep all of this together. All of these lower highs together. And it looks like we attempted to bounce from 31.73, but it didn't give us much of a move. We only came up to backtest that value area low. Let me just throw this over. So you can see we SFP'd 31.73. We backtested the value area low and we rejected. So we couldn't get back inside the volume profile. And that's when we saw our big aggressive dump after bearishly backtesting. So nice little liquidity grab, bearish backtest, and then unfortunately, because you couldn't get back in, that's when you see the aggressive drop. But we have now SFP'd the more macro low. There is liquidity there. I don't like the way this looks so far. This does look so far to be 3-wave corrective. If this was going to be an impulse, wave 1, wave 2, wave 3, you would want to start seeing volume come in here, and you would want to see this thing continuing. It's looking like we're starting to roll over. This could be just another 3-wave corrective move before continuing down here. Money flow doesn't look the best here. It looks like it wants to roll over again. NAMI is about to roll over back into the red. Let's go to the 4-hour. See, the thing though, and even on the daily time frame, we do see nice bull divs. Money flow starting to curve up. I would be looking maybe for another local low, but overall on higher time frames, ADA is starting to look pretty juicy. Because of that impulse down, those 1 2s, our big third wave, if we're in our last 4 5s, that's when you want to start looking for swing longs, once you start to get into the 4 5s. Now, I mean, the next kind of levels down here are like 23 and at 24 cents, 23 and a half, 24 cents. And if we look at, let me just hide this volume profile. And we take that volume profile of the entire lower range. Yeah, I guess we're even kind of struggling with that value area low. Ooh. The thing is, ADA's at some key lows. Like if volume support, it's at volume support. It's at, we grabbed liquidity here. If we can't get a significant move up from this, like we are most likely going to come take out your bear market lows. Most likely come down to 23 cents to take out all those lows. But I would say if you do come down and take out those lows and SFP those, the way that this impulse looks here, being almost finished or finished now, we could say it's finished now. If this is the 1 2s, here's your 3, 4, 5, 4, 5. It's possible that you do within very local, like price action, take the low one more time. But I would be, honestly, guys, this looks pretty darn good for a bigger move to the upside. The daily time frame money flow now is leaving of the past 3 days of the big red candles that we got. It's leaving again because when we looked at this on Friday, it was still rising pretty nicely here. I do not like how that is starting to roll over there. I want to look at our 3-day time frame. Man, yeah, and 3-day time frame money flow still looks pretty bearish, but it is setting up once again for those really nice bull divs. Setting up for really nice bull divs. We just want to see some sign of strength come in before we start to swing long, because it could continue here until we get those nice bull divs confirmed in the swing long. We're at pretty damn key support though. Like if we look at our bigger range, we're at some pretty dang key support. Value area low, actually our bigger range here. You're at the value area low of your bigger range, pretty much your entire price action since the bear market, the last bull market. Value area low in here. I'm just going to get rid of this. So that's what I would say with that. Okay, wait. I saw a super chat. Jesus Save 77. God bless you, man. Thank you so much for being here. Thank you so much for the super chat. Really do appreciate that. Okay, I'm sorry, guys. I haven't been reading the chat. Let me just read some of this real quick. Okay, wait. Could you please explain what the bull divs actually are? Not only how to spot them. Well, bullish, a divergence is just the trend starting to weaken, right? So as you're going lower in price, your momentum is less low, right? It's less extreme. So even though you're going lower and lower in price, your momentum is finally starting to change. And that's just the bullish divergence. Now, there's a technical reason between the candles, like what it means all between the candles and stuff like that. I can't really explain that to you in much knowledge, but here's the thing: you don't even have to know why bull divs work. You just know that bull divs do work, right? So, but it's all about momentum. If you're in a big trend to the downside, remember the trend is your friend until the end. So if you're in a big dump to the downside, but your initial dump here, that momentum wave went super deep, but now you're lower than that initial dump, but your momentum is starting to lessen out, like your momentum of the dump to the downside. That means the move is starting to weaken. The sellers are getting exhausted, even though you're lower. And that's what you want to see. You want to see that it's about selling exhaustion in the case of bull divs. You know, so, and it's about buying exhaustion in the case of bear divs. But it's pretty much just seeing exhaustion of the volatility of the move. Yeah. Okay, Caesar Coco. Divergent means money flow, volume, momentum are bullish going up while the price is going down. Similarly, yeah, it's kind of similar to CVD absorption, right? Like when you're looking for CVD absorption, you're seeing the price making higher lows on the chart. Your CVD would be making lower lows on the chart, and your open interest going up. So even though, because CVD is market shorters or market longers, right? So if your CVD is going down, that means a bunch of people are shorting the market. But even though a bunch of people are shorting the market, Bitcoin's still maintaining its bullish momentum. And that's a pretty good, and if it's rising with open interest rising, that means new shorts are coming in, but they're not able to push the price down. And generally those new shorts will get trapped and be used as fuel for the upside. So it's really based off momentum, the momentum of the trend, the momentum of the move down in this case. Is that bottom indicator free? No, this one is not free. This is Crypto Don Juan. This is called NAMI trading. NAMI is the name of the indicator, and it does come with a lot more too. You can see you do have NAMI D, which is pretty much, it gives you these on the actual candles. It gives you the hidden bear div prints on the candles and everything. And then you have NAMI SMC Pro, which gives you order blocks, breaker blocks, fair value gaps, things like that. It's all part of one package they've got. And the link, I can get you a 50% off though for it. It's a paid indicator, but if you use my affiliate link in the description, or Time Attack just posted it in the chat, and you use the code Divine50, I can get you 50% off. That was the best I could do for you guys. And every once in a while, he'll run a sale for like 60% off on a like Black Friday sale or something like that. But to me, it's worth it, man. To me, this has helped me stay out of bad trades and help me get into good trades. It's paid for itself in one trade. Okay. Do I hold spot? Yes, I do hold spot. I actually did just buy some spot on Ethereum at 2160. Okay. How can you tell these larger distribution structures won't playing out in full on some of these? I don't know. So Caesar Coco, like on Ethereum, I don't know that this larger distribution is not going to play out. we have a bullish and a bearish scenario, right? And like I talked about on Friday with Solana, if we zoom out onto the weekly time frame, or right now we're on the 3-day time frame, this entire 2-year long range could be distribution. You know, a left shoulder, a head, a right shoulder, or you would call this a tap 1, a tap 2, a tap 3 of a Model 2 weekly distribution, and we could be about to distribute down. We don't know. Actually, scarily, we can get a hint from Market Cipher and from NAMI, because here's the thing. For me, I'm pretty good at analyzing distribution range based off of what you're seeing on Market Cipher. So if you're seeing from tap 1 to tap 2, you're seeing bear divs. And then even if tap 3 is a lower high or if it's a higher high, like in a Model 1 distribution, you would have a higher high. If you form a Model 1 and you have another higher high and you form a third drive of bear divs, that's very likely to be this, and your money flow is draining out as the range is forming, very likely to be distribution to the downside, a distribution range that's going to break down. Now, even in a Model 2, you have the bear divs confirmed on high time frames. You have money flow starting to drain out as the range is forming, and you got that lower high trigger wave. It's not a good thing to see. It's actually likely to be distribution. I hate to say it, but on Solana, I don't like the way this looks. This looks like a distribution range on the weekly time frame to me, where we could distribute way back down as low as $31 to $28. I hate to say it. $73 to $74 is pretty good as well. A support. But we don't know. And that's why I was saying for Solana over the past couple of weeks here, we really needed this bottom range to hold. It is starting to break down, guys. This is not good to see on Solana. That range that we really wanted to see hold start to break down. And we're losing a key volume support level. The value area low of your 2-year long range is breaking down. Right? And we even fell through our big support. We had really nice support at 105, guys, and we smashed straight through it last night. I was watching this live as it was happening, smashing straight through it. We had a naked weekly point of control. We had a daily level at 105, a naked weekly point of control. We had a weekly level down there. I mean, we had so much support down there. Naked daily point of controls down there. 106, 105 area. I really thought I would hold it. And now look at what's happening. We smashed straight through it, and it's kind of acting as resistance now. So are we going to drop back down to $86? Let's see, monthly levels. I mean, it was also our naked monthly point of control. So 105 was such a big key level of support that I'm genuinely surprised we didn't get a reaction at 105. Genuinely surprised. Now, hopefully, we can reclaim it and start to kind of hold it as support, but it's unlikely if Bitcoin's going to continue down. We did see an internal SFP today. If you guys caught that, that would have been nice. From the weekend lows. A lot of the coins today, Ethereum had an SFP of the weekend lows today, and so did Solana. Nice. And on NAMI, multiple drives of bull div, money flow bull div. Just be careful, because once again, this could be a flat where now we're just going to come up to take out these highs around 106 and then roll over. I have to say, nothing looks too bullish right now. This bounce that we're seeing on Bitcoin today, the bounce that we're seeing on altcoins, this looks, I mean, if this was impulsive, you would want to see some movement coming in soon. We're really just not seeing it. Okay, I know there was a couple other coins that I was going to look at. Mark Dutch, welcome in. Model 2 prostitution. I love it, Mark Dutch. I love it. Welcome in, man. Thank you so much for being here. Okay, Mark Dutch, there's a release of tons of documents on how to do this on X at the moment. Jeff or something had a complete guide. I'm not sure what you're talking about. Oh, Where can I order a Model 2 prostitution? That's so funny, man. All right, ZMX, thanks for joining, man. You have a good one. Okay, let me scroll up in the chat and let me drink some more water. Scroll up in the chat. We'll look at some of the altcoins. Okay, so we did TRX, we did SUI and Chainlink. Okay, XMR, SUI, Chainlink. Yeah, we'll look at those. Let's go to real quickly SUI. I'm going to try to be quicker with these guys. SUI is coming down to that support level that we had marked out. It is your 0.65. It's your golden pocket. It's your macro golden pocket. Remember on Friday, I talked about how because we're losing this pitchfork, it's likely we're going to come down to this support level. So it is your 1.236 Fibonacci extinction because we're looking at a potential larger corrective move. If this giant push up was an impulse, flat, three-wave zigzag correction down to the golden pocket, and then we could push up here. So you really want to see this golden pocket hold. You don't want to lose this golden pocket. It is the nice daily order block that we had in here. So a daily level, obviously, as well. Daily order block. It was our 0.65 golden pocket, log golden pocket, and your 1.236 Fibonacci extinction. Pulled from high to low to high. So we're measuring this wave here. And that target for a zigzag correction, if this is going to be a zigzag correction, and then we're going to come back up between the 1-to-1 and the 1.236. And we're coming down to the 1.236. We're coming down to that daily order block and that golden pocket. Oh, man, money flow just looks like garbage, though. Hidden bear div is printing also. I mean, man, it really does look like a bear market could be about to be confirming, guys, because Bitcoin's at some major lows. Let's see if we get down to 70K, but the altcoins, the money flow just looks so bearish, and we're also invalidating some bull divs that we could have seen. Actually, we still have bull divs between that low. It's very slight, but remember, bearish money flow is always going to overpower a single bull div. So we need this money flow to start to curve up pretty quickly here and make money flow bull divs as well. In other words, this really kind of has to hold on SUI. If it doesn't, we could see a much further drop. I want to check on the 4-hour. Let's see. Do we see? Yeah, gosh, that money flow is pretty bad. I would say that this is likely to be a flat in here as well, or we could push up a little bit more for a zigzag correction, but it does look like we're going to see one more low. 1, 2, 3, and we could be seeing a fourth wave come in here before seeing that one more 5 down to end this. Let's zoom out to the weekly. There is really not a lot of support below us, guys. There really isn't. And if you look at these 2 weekly candles here, you know, a little bit of a fair value gap in here that could be filled, but there's not a lot. Like the next big level, is that a monthly? Let me just, yeah, I mean, the weekly and the monthly 76 to 70 cents is really all that we have in there. I want to check our naked monthly point of controls here. Yeah, so you guys see how I said we could make one more local low? We still haven't hit the naked monthly point of control that was below us. That should be on my chart. Why is that not on there? So we do have one more low that could be made very locally to actually hit 103. That naked monthly point of control at 103. But pretty much where we're at is very macro support here that has to kind of hold. What I don't like here is if we're looking at that bigger zigzag correction, right? An ABC correction, impulse down in an A wave, 3-wave corrective move in a B wave, and then your C wave, you're looking for an impulse as well. You're looking for an impulse in a C wave. What I don't like is if you look at the start of this, you have some 1-2s, 1-2s, 1-2s. You have your big third wave here. Well, you could say that this was the end of the third wave because this did take out that low, just barely. So if we're looking at 1-2, 1-2, 1-2, a big 3, you have a 4 in here. You still haven't none of this was lower. So you would be looking at your first 5 in here, and then you would need some 4 5s, 4 5s. If you have 3 1-2s, you're looking for 3 4 5s, and that's what could be scary. Is we could start to continue to grind sideways and down for a bit, maybe until we get to that 76-cent area. If I was looking to acquire SUI, I would be waiting for a big sign of strength, a real big sign of strength. And we can actually even now look at the very bearish trend of looking at the original. So $0.90. We didn't hit the pitchfork midline here. We front ran it. So we might actually come down and hit it. So depending on time wise, it could be anywhere from like 91 cents all the way to like 88 cents. Let's see if we can get one more local low to actually hit that naked monthly point of control at 103. Chainlink is coming down to our macro level. Now, guys, we talked about Chainlink as well, coming down to this level. And this is, okay, so I guess I bought more Chainlink as well because I did have some spot limit orders in on Chainlink. I had a spot limit order at 992 and at 935. But Chainlink is at its macro golden pocket, pulled from the bear market lows all the way up to the cycle highs up here, coming down to that macro golden pocket, which we did front run in April of 2025. You can see right here, it was some liquidity right before an aggressive move up. So a lot of buyers stepping in, putting their stops below this low. We front ran that low just barely in April, and we front ran the log golden pocket just barely in April. The golden pocket was at 992 and we stopped at 10.1. Get rid of this. And so this is a macro support level, but is this impulse done yet? The impulse to the downside. 1, 2, 1, 2. All of this being a 3. This is your first 4. And because we didn't make new lows, I mean, you would have to say this is some sort of running flat actually in a 4. This is your first 5. Now are we going to see another 4 and another 5 come in? Unfortunately, you have to say if this is your big third wave down here, because like SUI, all these are higher lows in here. This is a flat, a running flat in a 4. This is your 5. Now we need another 4, which could bring us to back test the value area low of our 2-year long range before seeing one more 5 come in. Man, I just can't believe how bearish some of these coins are getting here. But we're at macro support levels, guys. I bought some. I'm willing to hold this, even if we come down and take out the lows at $8. Because I think overall, this thing is going to continue. Now, one thing I can say here on Chainlink, Let me just get rid of some of this stuff now because obviously we don't need these resistances anymore. They're old. One thing that we could see here on Chainlink, because we're breaking the value area low. So what really, as far as volume profile trading goes, we came up to the highs, the value area high of the range. We saw a harsh rejection. We back tested the pitchfork lower band. We held it. We broke out of the value area high with volume. So that was nice to see that breakout right there. But you formed a failed auction above. So you tried to see a true breakout. Usually you'll break and come take those highs. But we formed the failed auction up here. And as soon as you fall back inside your volume profile, you can actually expect to move down to the POC. If the POC doesn't hold, you expect to move down to the value area low, right? So we lost we did see a small bounce from the POC, but we made a lower high. Then we lost it, so we went down to value area low. For the last 2 months, the value area low has been holding, but we keep rejecting from the POC and the pitchfork. Rejected on the bearish backtest of the pitchfork, rejected on the POC. And unfortunately, we're now starting to lose the value area low and close daily candles below the value area low. We're losing it with volume to the downside. So when you start to lose your volume support of the range, oftentimes you'll come for the liquidity of the lows of the range. And unfortunately, that's at what, 821, 8. So we might come down to grab 808 because we are not sustaining above the value area low. I guess, yeah, because we have already taken this internal liquidity right here. So, man, it's just such a crucial area of support that we're at right now. But it absolutely could continue to drop. And the way daily money flow looks here, man, I wouldn't be surprised if we do continue to drop to $8.08 or like $8, let's say. We could also look, yeah, at our distribution range, or excuse me, accumulation range. So this was an accumulation range that lasted almost 2 years long. We could come down to backtest the highs of that range, or the value area high, around 775. So maybe an SFP of $8 into 775, where I would really expect that to hold. If that doesn't hold, the crypto market is in serious, serious trouble. And we could even look at our 4-year long range, kind of like Ethereum, this whole entire upper range here. $7, man. That's what I don't like. What I'm seeing here is, look at this big gap in the volume. So this was a high volume node up here, high volume node here. There is a gap of volume in this volume profile. So when you start to fall through that gap, you can fall through it very quickly until you get down to the support, the major volume support level. If we don't hold kind of where we're at right now, it's highly likely we drop down to $7.75 or even $7. That would really suck. Okay, let me check this chat here. Yeah, you threw a good amount on spot as well. Let them go down as needed. We'll collect on the upside. Yeah, see, Baby Genius, I have kind of the same theory and thinking as you. I'm okay buying near the lows of a major range, and if it goes a little bit lower, if it goes 20% lower, I'll scoop up a little bit more. This is DCA zone for me, right? DCA zone. So it's not like I'm throwing everything in right here. I was even buying at $12 and $14 in April. And I will look, and now, by the way, I did take some profit on that I bought here. I did take some profit once we started to lose the value area high. But I will look to accumulate in this zone. Accumulate. And then if we do see another run up, I'll start selling. It's a long-term game as far as spot goes. Even USDT is breathing but bullish locally. Yeah, let's look at USDT dominance. Where's that? Wow. Yeah, guys. Remember, I was talking about this most likely being like a bull flag type structure where if we don't SFP these highs, we're likely to come up. I mean, geez, we could come up a bit higher here. We're around the POC of your upper range, but breaking out of this lower range here and not grab, like, what you wanted to see if you wanted to be bearish on USDT is you wanted to see the fake out here, the liquidity grab, and then that drop. And I talked about this on Friday. We didn't see that. We front ran the liquidity grab. Was that on Friday? Or no, we started to see it on Friday, but it didn't play out. And now this thing is breaking out here. In a very bearish scenario, let's just, I'm not a pattern trader per se, but we can like kind of take a measurement here of this area. Man, we might break up to 9.2%. Actually, that would be taking out the pretty much SFPing the highs up here. Dang, that would really get bearish. And you could even say you could take this as all the way down to this guy here. Yeah, I mean, taking out those highs, you could see it would be an SFP. Taking out those highs with that bull flag breakout. And that would pretty much be bear market, guys. If that happens, that's bear market. It actually looks very similar to this in here. You pump, you kind of form this bull flag type of thing, and then you break out of it. Now I'm curious. Shrink this up. Let's see. Let's throw that there. Oof, that could get really ugly. Could get really ugly, guys. I'm going to keep that fractal just in case. Okay, let's check Bitcoin locally. We are about to close the daily candle. I mean, Bitcoin's hanging on by a thread, but I have to say, what we're seeing here looks corrective. Are we going to see something like that? Honestly, it looks pretty corrective to me. Bitcoin dominance is consolidating in almost this triangle type pattern here. So Bitcoin's, in other words, is going to hold up a lot better than the altcoins, which we expect in these very fearful dumps that we see. Man, and we're about to break out of the value area high. You can see of this lower range here, we're about to break out of the value area high. It's trying. It's really, really trying because it's flipped the PLC to support and it's holding locally as support. So I think this thing might want to break up. In other words, Bitcoin's might dump to 70K, but the altcoins are going to dump a lot harder. Okay, let me scroll back in the chat. I know. Okay, we were going to look at Jasmine. I haven't looked at Jasmine in a long time, guys, so this is probably really old. Man, we broke that value area low, that weekly. That was the support you really wanted to hold in there. And we're even breaking down past the golden pocket. So you can see from the lows to the highs, your logarithmic golden pocket, we bounced from it in April, but we couldn't get back above the POC. And now we're losing it. So the next, let's throw on that 786 as well, that macro 786. That's where we're hitting today, or yesterday, I should say. Money flow looks very bearish. Hidden bear dip printed on that lower high, rejecting from the pitchfork. So this was also your bullish structure, guys, and we lost the pitchfork, bearishly backed us to that pitchfork, and because we rejected there, you expected new lows. We did see that over the weekend. That was a few weeks ago. Actually, yeah, perfect rejection of the bearish backtest of the pitchfork, so you expect to come take out your lows. And we just did that today. We're SFPing those lows into your 786. Damn, I'll say this. This is one hell of a liquidity curve where you could see a giant short squeeze here. This actually looks... Nah, these bull divs already played out with this push up. So now we don't really have nice bull divs. We'd want to be seeing bull divs in here now. And we do. Okay. So we have a very steep channel, like channel type structure in here on Jasmine. I would actually pull it to this guy. Nice channel structure. We're hitting the bottom of the channel. We're hitting our 786. We're SFPing those lows from a few weeks ago. I would want to see this thing break out. Like, if you come up here and you reject from the top of the channel, you probably are going to come down again. What we want to see is we want to see that 1, 2, 3 breaking out of the channel, maybe see a 4 and then a 5, a little mini impulse to start it, get a bigger wave to retrace, and then you'd want to see that big third wave, which would be the short squeeze of all of this. So this would just be the mini wave 1 of a bigger impulse to the upside, where honestly, you'd be looking overall, maybe that third wave, 4, 5. You'd want to get back inside your pitchfork relatively quickly. Get that bullish momentum back intact. Pretty nice. Bull divs are forming. And even locally, some nice bull divs, I guess, only towards the bottom here on NAMI. That's the 2 hour. Let's go to the 4. Yeah, you do have some good bull divs in here. Money flow overall is kind of curving to the upside. And you had some nice bull divs in here as well. So the Jasmine, if you caught the SFP of a few weeks ago's low into that macro 786, it was at least a good scalp. And now I would just be watching for the flat, see if we're going to see a flat in here. and it would be right at the top of the channel, that 1-to-1 to 1.236. So if you start to reject from 00628 to 00646, just be aware, because that means that this was probably a 3-wave corrective move before making new lows. And then actually on more macro time frames, let's go back to the weekly. You have that weekly coming in at 5 cents, 005. Jeez, there's just not much support. Yeah, I would say. So you can see we're holding right around the value area high of your accumulation. This was accumulation in here before that big expansion leg to the upside. So you are coming down to some crucial support. Could you drop a little bit further to that weekly to make another new low? Sure. If Bitcoin continues to drop, we might see that. What we're going to want to see, though, overall on the higher time frames, is you're going to want to see this starting to, and this has been a strong trend down. So you're going to want to start to see some range starting to form in here, right around this general area. If it does, you might be able to see that bigger move up. And if not, just like ADA and Chainlink, you're going to have all these lows in here. Actually, I mean, like this low's been taken out by this low. That's a double bottom. So those you could come down to 00295. That would be pretty aggressive of a dump, but wow. Okay, any 12 setups to the upside across all assets that you could share here? Well, I'm looking at Chainlink right now. Chainlink is at that macro support. What I'm worried about with Chainlink is because we're losing the value area low of our range right here, you could drop to take out the range lows. But if we SFP $8, I'll look for a long from the SFP of 808. I did just buy some spot on Chainlink in this zone. And now I'm just going to be patient. We have to be patient and sit on our hands and wait for some sort of relief. We want to form a range here. But if we start to form ranges, that's when you could look for longs to come in. But when you're seeing such an aggressive dump like this, it's best not to try to catch the knife. And I would say we should wait. We should wait, especially with Bitcoin front running 74K, with Bitcoin having 70K down below. Because if Bitcoin drops to 70K, Chainlink is going to drop to that 808 area. Honestly, on Solana's another one I'm interested in. You did get that SFP today, that of the weekend lows, but I would be watching just to come up to take out these highs before dropping again. And Solana could be in that distribution to the downside. Now, if it is in distribution to the downside that's about to occur, I would be looking at coming down to $73.50. You could see the naked monthly at 73.5 and the weekly at 70. So I would be looking to come down to this general area in here. Gosh, yeah. Okay, we could also say very similar to Chainlink. Because we lost the value area low, we were chopping between the POC and the value area low. Because we started to lose the value area low, you could look for going for the liquidity of the range low. So your last hope that this isn't distribution to the downside that's going to break down is coming down to grab your $96 lows and SFP those. So actually right now, what I will do is I will set an alert. We're going to put SFP long. So, you know, Bitcoin's right above 74K. If Bitcoin comes down in SFP 74K and Solana comes down as an SFP's $96, $95, then I would look for long on that. Only if it SFPs though. So that means the wick below and then the reclaim. Right? Say we're in this flat right here and you come down one more time. Get that SFP. Once you start to reclaim it, you could look for the long. Yes, Bubba Trading, welcome in, man. I did go over Bitcoin. Long story short is I think we're still in a move down. So from our $98,000 highs, we're in that larger fifth wave to the downside. Wave one, a flat and a wave two, a wave three could be done. We did hit the 1.618 Fibonacci extinction. If we take that trend-based Fibonacci extinction, not extinction, extension, we hit the 1.618. And we could be in the fourth wave, which lasts 1 to 3 weeks, because this lasted 1 week. From this low to this high, that running flat that we saw in here. So our wave four could last a week, but it could also last 3 to 4 times as long as your wave one, or your wave two, excuse me. And then I would expect one more low to come in after that to finish this overall bigger fifth wave. So watch for about 80.6 to 82.5K. Now, that's if the wave three is done. And it might not be. Like Lost X said. You know, if we're looking at this as a 1, 2, your third wave here. Yes, there is a 5-wave count being a 1, 2, 3, 4, 5. But this last little bit right here looked kind of corrective. So we might be in a flat for a 4 before coming down for a 5. That would be the end of the third wave. Then you would get that bigger retrace in a 4 before seeing a 5. The next couple days is really going to tell us a lot. And the SFP of the local highs are rejecting between 80.6 and 82.5 is going to tell us a lot. 82.5 to 80.6. And pay attention to 80.6 because that's your prior lows, your prior macro lows. Right? So pay attention to those because if you come up and reject from those prior lows, it's still bearish. In the sub 4 in. Is the sub 4 in? It could be in. I don't think we actually did. I guess we had more of a double top here. So yes, it could be. You know, in a flat, you actually minimum target is the 0.9. So we've surpassed the 0.9 Fibonacci. But generally, even if this was a flat, you'd want to come up between the 1.236 and the 1.382, which I had on my chart as well. That would be your flat. And I would be looking around 80.5, just because it's right where your 382 is. It's right where those prior lows are. So kind of the back test of 80,500 is going to be pretty important. because that could be that, and then that could end your wave 3, and then you could see the bigger retrace in a 4 before seeing a 5 down. This week is highly important for Bitcoin, guys. This week is highly important for the crypto market in general. Now, let's check out. I want to check out our total market cap charts. I showed you guys earlier today the total market cap chart, total, like of everything. You know, I think we might come a little bit lower in here. On total 3, yeah, I guess you are seeing a nice SFP. Not really, though, because it's 3 daily wicks in a row. It could be a weekly SFP of this low. And you are at your macro 786 Fibonacci. You can see where the macro log golden pocket was. It was holding for a few months, right? Holding for a few months. Held here, held here, held here, held here. But now we're breaking down. So we broke down to our next major Fibonacci, which also happened to be an important liquidity level. If this doesn't hold, and we are starting to close daily candles below the value area low, it's not a good sign, guys. That means you might come for the liquidity of the range lows. And that makes sense because altcoins could drop a lot harder than Bitcoin, especially how we looked at Bitcoin dominance about to break up. Money flow just looks bearish. No real bull divs here. Oof, same kind of thing here. Let's see that. Yeah, you got your 3-wave corrective move here. 1, 2, 3, 4, 5 in a contracting diagonal. Correction, 1, 2, 3, 4, 5. So your ABC here. And now you're dumping again. And now we're dumping. 1, 2, 3. We're probably going to come make one more new low here. But we're taking out some key internal liquidity on all the total charts. Earlier in the cycle, we front ran the log golden pocket, unlike the total 3 chart, this total 2 chart, front ran that log golden pocket. Now we're front running the 786, but it's likely that we do make one more low to actually hit that. Oof. Either way, you're losing the value area low in the golden pocket. Not a good sign, guys. Just not a good sign. I don't think we are in the 4th wave yet. I think we are still in the 3rd wave simply based on timing and structure that led up the 4th in the 3rd wave. Yeah, I get what you're saying, Lost X. Absolutely, this 3rd wave could not be done yet. Just based off that structure, I agree. We did hit the target for it. I guess we just had our daily close. We just had our daily close. So what we can do is mark out 76,895. So let's see, 76.9K daily. I'll throw this on. All right, guys. I do have to get going though. So thank you so much. I will still stream tomorrow, Thursday, and Friday. So you guys will get 4 live streams this week. 2 p.m. Eastern Standard Time tomorrow. Please come join me. By then, we'll have a little bit more data on the charts, and we're just going to keep following the levels and trading. As far as the altcoins go, guys, be very careful because altcoins could be about to dump even more aggressively. Just based off the total USDT chart pushing up aggressively, what could be considered a bull flag, and based off Bitcoin dominance about to break out of the range. If Bitcoin's going to keep dumping, it just means the altcoins could keep dumping worse. So please, please be careful trading altcoins. If you're not certain, wait for a range to form, guys. Like, wait for a range. We're losing very key support levels, like huge time frame support levels. The value area low of Solana at 123, we're losing it. Closing weekly candles below it. Very big breakdowns that we're seeing right now, which could mean, key significant drops. I will be watching for the SFPs. If we do get the SFPs, I will alert you in the Telegram if I take a trade. On Bitcoin as well, I will alert you in the Telegram if we take a trade. But just be careful here, guys, because this thing could be not quite done with the volatility. Now, we are starting to get into extreme fear as far as the crypto market goes. And this is when the time is we start looking for swing longs. We start analyzing the charts. We be patient and we wait for proper setups. But this is the time where we could start making life-changing money. That's why I came to you guys today in a live stream. I just want to prepare you for what we could see happen. Good opportunities only come like this a few times a year. And I'm saying this opportunity could be 1 or 2 weeks out, but we're starting to prepare for some major lows possibly being put in on Bitcoin, where then we could see, a nice move to the upside or the bear market and everything's going to go to zero. Love you guys. I'll see you tomorrow at 2 p.m. Eastern.